The Short-Duration Strategic Bond Fund offers an allocation to shorter maturity, lower duration fixed income assets. These are bonds which typically mature in 5 years or less. The fund offers an allocation to a broad fixed income universe, although the majority of assets held are in high quality investment grade bonds. The fund also invests in government bonds, inflation-linked bonds, and some high-yield bonds. Lower duration typically means lower risk profile compared to a standard bond fund. Our investment process is centered around building a portfolio of high conviction ideas across both rates and credit markets. The portfolio is divided up into two sleeves, an active credit component, which is essentially the engine of yield for the portfolio, and also a rates component, which seeks out the best ideas across both duration, cross-market, curve, and inflation markets. Our investment process is built around short lines of communication and swift access to markets. We believe in a highly active approach, which we think is very, very important in today's market environment. Well, by design, shorter duration or lower maturity fixed income assets typically involve lower risk than standard bonds. This means that they're less vulnerable to a rise in interest rates or a rise in overall bond yields. However, we will hold some interest rate risk and we will hold some credit risk in the portfolio, though as I mentioned, less than a standard bond fund. ESG concerns are often inbuilt into our analysis of both government bonds and credit. Environmental and social issues can be key factors for interest rates if governments are financing debt. However, we don't exclude or preclude bonds purely based on ESG concerns. We believe this fund is the first step on the risk ladder in terms of accessing a total fixed income solution. It's lower risk by design, holding shorter maturity instruments, while also offering an allocation to government bonds, investment grade bonds, and high yield bonds. And as central banks begin to lower interest rates, this fund offers a far superior return to cash and also a much more favorable risk reward compared to a standard bond fund.